right now it is Monday, March 17th, 7:20 p.m. Pacific time. So just going to share a trade I got into yesterday at the open of the Asian session. Today is already Monday, so Tuesday in Asia time. Yesterday I took a trade on Australian dollar yen. I took a buy, trading mainly the rebound on the weekly time frame here. So if I hide everything, you can see the weekly chart. It's been supported at 90.91. So the reason I identified this trade was it didn't look like it was going to break out meaningfully below the 94 level. So for 2 weeks, almost 3 weeks, we had the price supported at 92, 93 area. We had the doji on the first week of March, and then last week the price was unable to break through and closed above 93, call it 94. So I was buying this support on the weekly time frame, targeting a bounce back to the Kijun-sen level on the weekly time frame, about 97. And I will get into the low, mid and low time frames, but just to take a look at context on the monthly time frame, this is almost going back to the monthly Kumo, and it could be that the price may trace this past price action here and go back a little bit. So in terms of the monthly price action, it has not been a very strong sell-off. The price has been going down, closing below the Kijun-sen, but it's not like a violent sell-off like back in July of last year. So this increases the chances that it will not go down very sharply. So let me take a look at the daily time frame. So on Friday we had a bullish engulfing candle. It took out Thursday's bearish candle here. So after seeing Friday close, I was prepared to take a trade on the buy side for Australia dollar yen. Let's look at how this happened on the 4-hour time frame. So the green lines are exactly when I took the buy, but just hiding that for a moment, we'll see when Sunday opened, there was not a sell-off again. So the Friday close, we tested 93, 94 areas. So for 1, 2, 3, 4 candles, 4-hour candles, the price was unable to go down. So that's why on Sunday, pretty much as soon as the market opened, I took a buy in the Sydney session open right here. To show exactly when I took that buy, what time was it? It was 3 p.m. my time. So pretty much within the first 2 hours of the Sydney Open. The 1-hour candle I bought was this one. It ended up closing as a bearish candle, but I was buying when it was forming as a bullish candle here. So I held this position, and then eventually throughout the remainder of the Asian session, the price started floating up, and I took another buy at about 10 p.m. my time. So yeah, both of these were 1% risk to my stop loss. I think I placed my stop loss right below this wick here on the 1-hour chart. So yeah, 93.555 was my original stop loss. I've already moved these to a break-even level right about here. So right now my first position stop loss is at break-even, 94.375, and the second position I saw it seemed to break out again in today's Asian session, so I just moved it below the 1-hour Tenkan-sen here. But to show exactly where I entered on the 5-minute chart, you can see here where I entered at yeah, the 309, so the 1505 candle, it was breaking up here. Unfortunately, it retraced, but I held the trade to see if it would bounce, and it did. It bounced, and then, yeah, there was not too much volatility in the Asian session. Mostly the price is just gradually floating up. But then in today's New York session, it started going up a lot. So I actually kept this trade open last night with about 0.5% of risk open, or actually 1% between two of my positions. I was able to trail my stop losses rather tightly to maybe the 94 level, but I was just picking that off of the 15-minute time frame. I think it was 93.8 somewhere. But anyway, the price did not really sell off in the London-New York overlap. If there's no sell-off volatility, it's very likely the price will go up. So the first opportunity I saw the price this morning was already at 9 a.m. So it already went up violently, went down a little bit based on the London close, and then just had a breakout session the entire rest of the New York session. So yeah, around this morning, around 10 a.m., I moved both my positions to break even, 94,375. And then in today's Asian session open at 6:15 p.m., I moved one of the trades up to 95.077. Now, I was a bit unsure if it would retrace, but right now it's looking trading sideways. But so far in the Asian session, no sellers or profit takers have come in meaningfully to push the price down. So in terms of the 1 hour chart, we're still trending up. Price is trading above the Tenkan-sen here, and all the Ichimoku lines are angling upwards. So that's why I didn't close any positions yet. I was thinking of closing 1% of my positions with a profit if the price action went flat. But right now, it is a little bit overbought on the 4 hour chart here. But yeah, I don't see a lot of resistance up all the way up until my price target, which is 97, a little bit over 97. So I picked this price target mostly based off of the weekly Kijun-sen here. Yeah, it also happens to be the upper bound of the daily Kumo, you could say, and also a lot of this previous resistances here. So it could have been that the price, it might have hit this descending trend line and then bounced back down before trading sideways a bit. But given today's bullish candle here, there could be some more room for this trade to run before it retraces. So this is just in terms of technicals, comparing the different time frames to previous. But another reason I took this trade was taking into account the fundamental macro picture. So the Aussie dollar usually is correlated with commodity prices. Australia's economy is a lot heavily leaning towards resource extraction, mining, things of those nature. And in the last couple of weeks, a lot of the commodities have been going up in price. Mainly gold. Gold is breaking out very strongly again over 3,000. In fact, this is one of the trades I was watching. It's actually breaking out again in today's Asian session. So I could trade this if I want to. I actually might take a trade on this. But even other commodities, silver is matching gold's move, and even copper is making a pretty big run to rebound. Let me just check where copper is. Okay, so the copper price, these are futures, not the actual currencies. But let me see if I can find copper. It's XCU USD. So copper on the monthly chart looks like it is breaking out of these resistances here. So whether it's a sign of inflation or countries are expanding their production, it may be that, you know, all a combination of those reasons, but for all of those, the copper price is going up again. This is with a relatively high interest rate environment. So the Fed has paused interest rates, I believe, around 4.25%. It has not indicated it will cut rates yet. It remains in a wait and see approach. But even with that kind of restrictive environment, commodity prices are moving up again. And there doesn't seem to be appetite for the Fed to cut right away. At least in the US, there's a lot of issues going around with the government debt levels. The new administration is trying to get spending cut down a lot in the federal government. So yeah, that could precede some interest rate drops, but without getting too much into the macro picture, all I can say is from the price action of commodities like copper, it's going up. So that's another fundamental reason behind my Australian dollar trade. So actually yesterday, Aussie yen was the highest moving currency pair trading on Monday. I think it moved about 1.1%. Yeah, none of the other currencies had as big of a move. CAD yen was a second choice, but given the attention around tariffs around Canada, I didn't think CAD would move as much, even though it's also a natural resource currency. And sure enough, we didn't get as big of a move in Canadian yen, although it did have a bullish day as well. And just to compare Aussie yen with another currency, let's say dollar yen. Dollar yen also was not as strong, probably also because of tariff concerns. We can see here there could be a bounce, but I think the Aussie dollar was a bit oversold given the interest rate hike environment from several months ago. But now it could be the markets are turning and they need to reprice the value of the Aussie dollar. So in terms of how this trade will go, I would like to hold it until my price target 97. It could retrace along the way, but I don't know how much. So yeah, mainly this trade is a setup on the weekly chart, a rebound type of setup with a trend confirmation on the 1 hour chart. So right now it doesn't look like there's any selling activity going on. But this is kind of hard to trade in my opinion whenever it's just a gradual move upward. There's no volatility, but sellers could come in at any point. Yeah, the Aussie dollar does have some volatile moves sometimes. Yeah, like in the sell-off in the end of 24, this was a pretty big move. So yeah, I will have to see how far this trade can go. But you know, when it rebounds, I'm just looking at some previous examples, like in September 24. It's quite hard to pick where it might retrace. You think it gets to a resistance level in some of these areas, but it just keeps going and grinding up a little bit. So yeah, I would probably have to put more context from the higher time frames along this chart. All right, so this is where we are right now at Monday session, Tuesday in Asia. So I'll provide more updates later if I can.